Do you like this as an investment theme around the retailers? It certainly is counterintuitive that back to school would be doing well. But I guess if you're looking at apparel, it's very different than looking at electronics.
Yeah, absolutely. For me, it's almost, again, going back to that tech story again. A lot of the parents that are homeschooling their kids are going to go out and buy laptops and iPads and different types of technology that support the at-home learning that they're going to have to do. So again, it plays into whether it's schooling from home or officing from home. You have this work from home theme where there's a huge reliance on technology, on online communications, the Zoom Boom type of names. And I think everything from the Apple to Microsoft, the 5G, the semiconductor types of names, the work from home types of names are going to benefit from this. And I think it's also a great opportunity because I think we're just starting a societal change here. I think we're at the bottom. I don't think that the valuations in those names are too high. And if you look at some work from home ETFs, semiconductor ETFs, it might be a good way to position for that trend. For me, it's a tech story.
Stephanie, after a couple of weeks of slightly tepid economic data, what did you make of retail sales? Also, Brian Moynihan today on the Bank of America call saying that their credit card spend data, which was was flat in June, was actually slightly higher year over year in July, which might not be what people expected given the spike in cases.
I mean, I think the consumer has been resilient, 7.5% month over month after last month's number was revised higher to 18.2%. That's huge, Wilf. That's absolutely huge. And I would actually say, I think this article on your site about this back to school phenomena, I think it's already happening, by the way. Electronics in the month were up 37% month over month in the most recent retail sales report. So I think that employment is certainly not great at all by any means, but it is improving. You've got confidence has stayed pretty high, actually, which has been surprising to me. You have no inflation anywhere. And then you also have a savings rate at 23%. Plus, you have another probably $1 trillion in fiscal stimulus coming in the next couple of weeks. Let's watch and see how that goes. So I think the consumer is OK. And I'm encouraged, very encouraged by the data that we've seen in the last couple of weeks.
So the argument, Stephanie, is that the consumer is okay because of the tremendous amount of stimulus that has been flowing. And that's why confidence has held up, and that's why spending has held up, and that's all just sort of artificially distorting the picture of what Americans are feeling right now, which is joblessness with those benefits set to expire and run out.
Well, and I think that's why it's really important that Congress gets a bill passed. And I think it sounds like in fact, today I've been hearing 500 billion. Today I heard 1 to 1.5 trillion. And I heard sense of urgency on both sides. And I heard in the next 2 weeks. So I think that that's actually probably a pretty good thing. I don't like that we have to prop up the consumer or prop up the employees. But I do think that there is a tailwind here. I think the stimulus is very much alive and well, and if they have to do more, they're going to do more.
Broader markets improving a little bit again. S&P's down 0.4, NASDAQ, though, down 0.8%, jumping around there, as you can see, as we approach the close. 3 minutes left. Netflix getting set to report earnings in just a few minutes. Julia Bawson's got a key preview for us.
Well, Wilf, we are watching Netflix's subscriber growth and whether Netflix can continue its gains from last quarter. Netflix is forecasting the addition of 7.5 million new subscribers, down from the 15.8 million it added last quarter. The question is how many subscriber additions Netflix guides to for the third quarter. Analysts are forecasting 5.3 million. Now, in the second quarter, analysts expect Netflix to grow earnings 200% and revenue by 24%. Netflix shares have gained about 60% this year, and 61% of analysts have a buy or overweight rating on the stock. Guys, back over to you.